So you want to take your profits out of China? Here is the thing. There are legal ways to move money across borders as a China business owner. Today we are covering business transactions methods, not personal transfers. Big difference. I'll walk you through the white method list, the completely legal stuff, and then I will show you the black methods that you absolutely need to avoid. Trust me, knowing both will save you from making costly mistakes. Method 1. Payment to suppliers and deferred payment from abroad. This is the easiest and cleanest case you're going to find. Let me break it down step by step. First, your Chinese company pays to a Chinese supplier for some product. Nothing unusual here. Second, your Chinese company exports it to your foreign company. Again, standard business. And third, you receive payment later in the future. So when you accumulate profits in China, you just increase the credit line and extend the time for your foreign company. Simple as that. Now compliance considerations. This is where people messed up. First, don't forget to maintain proper contracts, invoices, package lists, and communication records. And do not create fake supplier relationships or inflate quantities. This is called trade-based money laundering, TBML. Advanced strategy, the adjusting price method. Here is a sophisticated approach that smart operators use. Your Chinese entity pays supplier in China full price with VAT, let's say 100K. But here is the clever part. You price your overseas company at a lower price without VAT, like 90K. So your Chinese company reclaims that after several months and eventually makes a small profit. The key insight, that VAT refund isn't taxed in China, so you have zero profit tax in China. But here is my critical warning, and I mean this. Chinese tax office allows it, but they look very carefully at it. So you need still to show some profits eventually. Don't minus and don't do zero. And you better have a bulletproof documentation explaining why all this pricing makes sense. Method 2. Local operating expenses. This is the second most popular method. Nobody restricts you from paying inside China. So if your profits are accumulating here, structure your international business right and find local expenses. That might be office rent payments, employee salaries, contractor fees, marketing, advertising services, software subscriptions or business tools, logistics, warehousing, fulfillment costs, and others. And when I say local, I mean local Chinese companies, but not service geography. China is an export-oriented economy. There is a huge industry of service providers in China who helps you expand your business abroad. So just move part of your international expenses into China. But there are some compliance requirements and don't skip it. Your expenses must represent real business operations, no fake services. Maintain all expense proofs, payslips, invoices, receipts, payment confirmations. And don't pay inflated amounts to related parties or create phantom service providers. That is money laundering, and if they catch you on that, it's gonna be a nightmare scenario for you. Sub-method, business development. So when your Chinese company is a part of a group, and this is the key, you can buy assets inside China and capitalize them on your Chinese company balance sheet. Think equipment, machinery, vehicles, technology. Buy in China, but use it within the whole group. That's the smart capital allocation. Method 3. Intercompany loans and offsets. Listen, the first two methods work in 90% of cases. And if they are not enough for you, my congratulations. Your Chinese entity's margin is so high that it exceeds reasonable limits of first two methods. I would love to have these kinds of problems. So what can you do next? Well, let me get into more advanced and complex territory, loans and offsets. The idea is simple, but the implementation, that's where it gets tricky. So you have cash on your Chinese entity account and need USD abroad. Your partner has USD abroad and they need CNY cash. So your Chinese entity lends CNY to their entity and their foreign entity lends USD to yours. And after a series of these operations, you signed an agreement where debts between entities offset each other. Clean and efficient. But here is the critical part. This area, loans, is watched very closely. Banks, foreign exchange offices, and tax offices of every country watch this space for money laundering, and one wrong step here and legal operations can become an illegal capital transfer. So remember, all sides must show clear economic purpose. Don't mirror transactions. Each loan needs a specific business purpose. Document everything, and I'm saying 100% documentation. Interest is required. And do this with someone who understands this area, especially from Chinese side. In some cases, you will need to register your transaction within Chinese authorities. Method 4. Dividend distribution. This one is straightforward, and we actually covered it in part 10 of our China series. Check it out if you haven't seen it yet. So step 1, you pay your taxes in China. Step 2, prepare audit and filings. Step 3, pay withholding tax, usually 10%, but there are treaties with some countries that can lower it. And step 4, transfer it, just like that. Yes, sending dividends out of China is not the cheapest option, but it is always available. No one will take your Chinese money, as they say in the comments to my shorts. Now let's move to the methods you absolutely need to avoid. And I'm telling you them because not to follow, but to recognize and stay out of them. These methods exist and are actually very widespread among Chinese businessmen themselves, so many foreign founders don't even recognize they are illegal. Method 1. Crypto channels. First, China banned crypto transactions long ago. There is no legal way to turn money from your Chinese business account into stable coins. That means no domestic or foreign crypto exchange will onboard a Chinese company. No way, because if they do it, this Chinese client will make only one first and last transaction. So just stop thinking about crypto for your Chinese business, period. Method 2. Fake invoices, 虚开发票. Let me explain you how it works legally first. You, as a director, pay your company expenses from your personal account. Then you provide 发票, Chinese local invoices, and you can reimburse it from company account to your personal account. Then individual money can be transferred more freely. The illegal part comes when the expenses and invoices are not real. There is even a black market of invoices in China. They use it for tax evasion, since reimbursements are not taxable. The government fights it by limiting categories of expenses that you can reimburse in China, and using strong technology. If the tax office sees unusual patterns in your company's spending, questions will be asked. And again, imagine how clearly the Chinese tax office sees it. They collected enormous amount of big data for many years, and now they have the best AI to analyze it. So if you can't explain how this expense could be real, you are in trouble. So my tip for you, just avoid it completely and sleep with peace. Method 3. Underground banking. Some Chinese financial agents will tell you something like this. We will invoice you in China for some services, you will pay locally in China, then we deliver you cash abroad. It will cost several percent, which is cheaper than extracting dividends, so it sounds tempting. Well, let me tell you how underground banking actually works. These organizations move money from everywhere to everywhere for a small fee, and it is so powerful because of Chinese people themselves. Rich Chinese are looking for ways to move capital somewhere. I started my first business in China in 2017, and back then I just couldn't get it. How do people move huge amounts between Chinese individual accounts, and China tax office just doesn't do anything about it? Well, things changed dramatically starting from 2024. Chinese authorities are now fighting them seriously. They use an imperceivable amount of big data and very smart AI to track it. So don't. It exists and you probably can get away with it for some time. But once you get caught, you are in serious trouble. And I'm talking not only about losing money, but long-term legal issues. Think prison time, not just fines. Method 4, TBML, trade-based money laundering. This is the most complicated, hardest to track, and therefore the most common illegal method. It includes multi-invoicing, phantom shipments, wrong classification of products, shell companies, and the hardest to track, over and under invoicing. Here is how it works. When a Hong Kong company, Supplier, sells your Chinese company with a profit, that's normal business. But when you ask them, issue an invoice 10% higher and give me the difference in cash later, both of you are doing TBML. Congratulations, you are now a money launderer. The rule of thumb to recognize it is value transfer. When the invoice doesn't reflect the real value of service or product, most likely it is TBML. It is crime, and governments all over the world are fighting against it. So there you have it. There are many ways to move your money out of China legally. Pay your suppliers now and defer payments from your foreign company. Move parts of your operational expenses into China and pay locally. Structure legally and offset loans if your amounts are big. Or just distribute as dividends normally after paying taxes. The black methods to avoid: don't look for crypto channels, there is no legal ways in China. Don't fake invoices, it's not worth the risk. Avoid underground banking and understand what trade-based money laundering is and make sure to stay away from it. Look, compliance might seem complicated, but it's actually straightforward once you understand the rules. And don't listen to those who say that China will seize your money. That's just not true. And if you're not sure how to set up a compliant business in China, Hong Kong or Singapore, check the link in my description. And if you are from a country considered high risk, we understand the problems you face, and we can help you to make everything legally, efficiently, and long term. Subscribe and see you in the next video.